Ledger. The term ledger is derived from the Dutch word ledger, Legger, which means to lie. Therefore, ledger means where the various accounts lie. Ledger, it is a book. It is a book where all transactions are recorded in the classified form. Ledger is the books of main entry or final entry. It is bounded book which contains all types of accounts, that is personal account, real account and nominal accounts. These accounts are opened in orderly manner and index is provided on the first page to find out which accounts is recorded on which page. The page number of accounts also maintained in the ledger folio column in the journal for easy reference. When the transactions are large in number, instead of one book, 3 ledger books are maintained. General ledger, debtors ledger and creditors ledger. 3 books when the transactions are larger in number. Instead of one book, they maintain 3 books. That is general ledger, debtors ledger and creditors ledger. General ledger is the book which contains all the real accounts and nominal accounts. Debtors ledger is a book which contains the accounts of all persons from whom the amount is receivable. Creditors ledger is a book which contains all the accounts of persons to whom the amount is payable. Features of ledger. Main features of ledger. It is derived or secondary record as the entry are derived from the journal. It is a book of final entry. Ledger is the book of final entry. It is a principal books of accounts and ledger is a principal books of account. Need and importance of ledger. Journal fails to provide the information in a consolidated summarized form about each person, expenses and assets. These shortcomings are overcome by passing the entries from the journal to ledger. Ledger accounts will be usually in the form of T form. Left side is used for recording the debit details and the right side is to record the credit details. On any particular date, the net effects of transactions of the same nature can be easily ascertained. One can find out exact position or balances of the particular accounts in the ledger. Let us discuss about the distinction between journal and ledger. Journal, it is a book of primary entry or original entry. It is a book of prime entry or original entry. But ledger is a book of final entry. Second, it records the transaction date wise in general, but ledger records the transaction relating to the particular person, assets, income and expenses. Journal fails to give the required information, but ledger supplies the relevant and required information. Journal position of the business cannot be ascertained, but ledger position of the business can be ascertained. So, format of ledger, that is title of accounts, left side debit side, right side credit side. So left side debit, right side credit. So the column includes date, particulars, JF, journal folio, amount column, and also credit side same date, particular, JF column, amount column. So meaning of ledger posting: it is a process of transfer of entry from journal to ledger. Debit amounts of the journal are posted to the debit side of the respective account. Credit side amount in the journal are posted to the credit side of the representative the accounts. Steps involved in the posting the entries from journal to ledger. A separate account should be opened for each account found in the journal. All transactions relating to the one account should be entered into in the account only. The journal entry should be posted in order to of their due dates. The name of any accounts should not appear in the account either on the debit side or on the credit side. The debit side of an account commences with the word to. The credit side of an account commences with the word by. By. The word to, to, and by, are prefixed to the entry can be made. While posting the debit side of an account, after the word to with the name of an account that has been credited in the journal. When the entry is to be posted to the credit side of an account, after the word by, write the name of the account that has been debited in the journal. So in case of accounts which has a opening balance, it should be entered before actual posting take place. An opening debit balance should be recorded on the debit side as to balance brought down, BD, and the credit balance should be recorded on the credit side of an account as by balance brought down, BD, B bar D, brought down. So these are the steps of the entries to be posted from journal to ledger. So next, posting of opening entry. At the end of financial accounting period, all the assets and liabilities accounts are balanced. All the nominal account balances are transferred to trading profit and loss account, and drawing account balance is transferred to the capital account. The asset accounts when balanced shows debit balance and liabilities account shows credit balance. These balances are carried forward to the next year. The opening entry for this purpose of the next accounting period will be all assets account debited to all liabilities account to capital account. So all assets accounts are to be debited as to balance brought down, and all liabilities and capital account are to be credited as by balance brought down. Posting of compound entry. Posting of compound entries. Accounts showing debit in journal are to be entered on debit side with the names of accounts credited. Accounts showing credit in the journal are to be entered on the credit side with the names of the accounts debited. Example, cash account debited, furniture account debited to capital account. So next, balancing of ledger accounts. Meaning, balancing refers to striking of the balance in ledger account, looking to the debit side and credit side. It is a process of finding out the difference between the total of debit side and credit side of an account. Generally, balance